Good morning, everybody. This is Kirk Spano, Investing 2020s, and I am live at the COP28 Summit in Dubai. I think I'm in Dubai, and we are going to talk about the major secular trend that the world is focused on right now, and one of the three major secular trends that we have been focusing on for years. Now, I'm not really in Dubai. I've just been reading all about it, and I'm not even sure if COP28's in Dubai. I just know that that's nearby. And I want to really explain and go through the sequence of why investing in the clean energy transition is so important for you, and why right now is a spectacular opportunity. And I think the one that we've been waiting for to dramatically increase your investments in clean energy stocks and funds. So why don't we get started here? Now, in our process for investing, the first thing that we analyze is whether or not there is a gigantic trend supporting or working against us on an investment thesis. And as I mentioned a second ago, the major trends that we are following are the fourth industrial revolution, which is everything tech and that tech touches. The darling right now is artificial intelligence, but really it encompasses augmented reality, virtual reality, low latency communication that we thought was 5G, and suddenly we're finding out that we're going to have more communications using space systems, satellites. It's biotechnology, it's cryptocurrency and the blockchain. It's all these things that are relatively new innovations over the last decade that have really hit the curve of being highly useful, highly effective, cheaper and cheaper, and being adopted more and more. We talk about the adoption of Bitcoin leading to more adoption of Bitcoin. The same thing holds true with clean energy. The more that we adopt clean energy, the more that we scale it up, costs come down, it becomes more normalized, more and more people try to move in that direction. Where are we right now when it comes to climate change? There is warning after warning, more and more urgency that nowhere is safe from climate change. I have bought and I'm developing a website called Climate Castles. Climate Castles is the concept that you need a home that gives you as much protection from climate change as possible. Not only will that be safer for you and probably just generally more enjoyable, but it'll preserve your house value, your land value over time. So the Climate Castles blog that should be launched in about a month is going to focus on places to live that will give you some protection from climate change. The best place in America to live is the Midwest, close to the Great Lakes. It's a pretty obvious choice. People are already moving here from other places. As I noted earlier in the year, it looks like greater Milwaukee's population will increase for the first time, I think, since the 1970s, might have been the 1960s, this year. And if it's not higher this year, it'll be about dead even. You know, we're looking at a small increase, but could be dead even. We don't have the full numbers. Why do I point that out? Climate migration, which the Pentagon has been saying for over 20 years is a major security risk, is happening already within our own borders and at our southern border. Many of the people who have come to the U.S. border along Mexico have come not only for oppression and economic reasons, but for climate change reasons. Many of the economic reasons they come are because climate change has destroyed their way of life, largely built on agriculture, which we talk about all the time. The reasons why I think agriculture is a pretty good investment, at least as a hedge. The idea that some people have that climate change isn't serious and that it's not fast moving is frankly wrong. If you want to argue with me about it, then you're picking a battle that I have decided that I'm not going to be gentle about anymore. I just can't sugarcoat it anymore how serious this is. So if you think that climate change isn't a problem, maybe I'm not the right investment service for you, because a lot of our investments take that into account. Now, I love mergers and acquisitions. That's probably the neatest trick I see for investing. It's a way to get an additional catalyst in your investments. But most of the companies that I think might get taken over or merged are in our major secular themes, which are, again, the fourth industrial revolution and clean energy, or the energy transition, call it what you want, decarbonization theme. And then that last theme, just to put it out there, is aging demographics and all the things in economics and macro that aging demographics impact. And when you take a look at a lot of the economic theory out there, that is the thing that they ignore. They just look at all these classical theories. They pick the one that they want to be a follower of, and then they decide to rationalize, okay, this is the theory I've chosen. I've chosen to be an Austrian economist because it's kind of cool and it's sensible and it's symmetric, but it's wrong for the most part, especially with the United States. And I'm not going to take into account some of these giant secular trends that affect the macro in a way that is major to the monetary and financial and governmental systems and industry. So when I tell you that climate change is a big deal and that decarbonization is a major, major investment trend that you can make a lot of money on, you need to believe it because it's true, and you will see mountains of millionaires minted from the decarbonization theme. How do we know that? Climate urgency dominates debate as New Economy Forum wraps up. This was about a month ago. And what happened was leaders from all these smaller countries and these southern countries, as we call them, are telling Western Europe and the United States and Japan and China, look, we're going to move forward without you, but it'll be slower without your help. And they have made, in my opinion, an implicit threat. And that is, if you don't work with us and you don't help us to mitigate climate change on our way of life, to help us try to get ahead, then that's going to come back on you and your system. Because another thing that we have to understand is that the Western democracies, which all pretty much used to be imperial powers, still have and still exhibit the type of behavior that isn't exactly nice, that isn't exactly supportive of the global south. And this is a major, major theme that has come up more and more this year, and in fact supports our Bitcoin theory. When it comes to climate change, and as I talk, I hope you understand how all these things kind of interweave, how different themes overlap. What you find is that the very fabric of international society rests in an understanding that life, liberty, and the pursuit of happiness is not just for Americans. That ideal has spread all over the world. Everybody wants to embrace it. Everybody, with the exception of the dictators, but their people want it. The dictators are just dictators because they're dicks. We will see a fragmentation and probably war if we don't address the various economic factors and the underlying things that impact those economics. Climate change, sharing of technology, healthcare, all those interwoven things. The idea that we can be America first and everybody else can figure it out on their own is asinine. It's led to 2 different world wars, or been a contributing factor to 2 different world wars and all the little skirmishes between then and now. The idea that we can separate our lives from those of the other people on the planet as we speed along here, we're on a curve that shows that is less and less true. Maybe you could have done it 100 years ago when the world wasn't so interconnected. You can't do it anymore. And anybody who tries to support the idea that we'll just take care of America and nobody else matters is a zucking fool. And climate change is one of those issues that needs to be at the forefront of every political and economic decision and discussion beforehand, because it's going to impact everything. Not everything in this or anything in that and everything in that. Just everything. And you need to wrap your mind around it. Now, as an investor, what does that mean? Well, if you go over to Bloomberg NEF, you can get a lot of information about what's going on. Again, this is the one thing that I share with you and tell you to buy, even though they don't have an affiliate program. This is the most important publication in the world to read, in my opinion, especially if you're an investor. If you're not an investor, it's still important because you'll understand the world better. Because capital long ago supplanted labor, probably shouldn't, but it did. And this will help you understand why money moves everything. Remember my story that I share all the time? Grandpa gave me some advice when I was in college. One of them was lay down in front of the baby boomers and they'll make you rich. That's worked out. The other one was, Kirk, if you really want to understand how things work, come on, folks, you can put this in the chat. What was it? What did I need to do? Is this a new group? If you really want to know how things work, what should you do? Mark is on it. Follow the money. And it's important to always remember that because it's easy to forget. There are fundamental things that we need to continue to focus on. The major secular trends and follow the money. And everybody wants life, liberty, and the pursuit of happiness. It's not that many things really to think, okay, everybody wants life, liberty, and the pursuit of happiness. The major secular trends are fourth industrial revolution, basically all the different technologies, AI being the darling, aging demographics, and climate change. And follow the money to know how we're going to deal with all that. A year ago, Van Eck talked about the Inflation Reduction Act and how it would be a green catalyst. As investors, we haven't really seen it yet. And I'll get to that in a few moments. But it has led to massive investment in green energy. There are articles out there to explain to you how the tax credits work, and I'll give it to you in the shorthand, and I copied this one because it said it the way that I would say it. There are essentially investment tax credits, what you get for building something that is part of decarbonization, and then there are production tax credits for actually operating the thing. So you get money for building the thing, and then you get money for operating the thing. Ametis is my largest microcap holding because they are already starting to receive investment tax credits. They just got 63 million. Remember, this is a company with a market cap of 200 million, and the government just gave them $63 million for building renewable natural gas dairy digesters, turning cow shit into natural gas. They're soon to get production tax credits for operating those dairy digesters that they built. And there are all sorts of examples of this out there, and it has led to massive investment. Our second step in investing after looking at the secular trends is government policy and central bank policy. There's an idea that every country needs something like the Inflation Reduction Act. Well, they're getting it for the most part. China, $500 billion into clean energy. They're basically covering their deserts in solar farms. Should be done building them in about 3 years. China may be producing half of their energy from solar in just 3 years. That's way ahead of schedule. Saudi Arabia, they're pumping all of their oil profits for the most part into fourth industrial revolution and clean energy businesses. So you have China, which is almost as big of an economy as the United States. Basically, they're a quarter of the global economy. We're a quarter. In Saudi Arabia, the biggest oil producing nation on the planet, we say the United States is, but if you look at the metrics, the reality is that Saudi Arabia could go by us anytime they felt like it. They just haven't done it because they want to be the last man standing with oil, which certainly they will be. We're number two. We're number two. Bloomberg talked about this recently. BlackRock talked about this recently. And all of our favorite private equity firms, Blackstone, Apollo, and KKR, have all talked about it as well. Brookfield Asset Management talks about it. They are seeing $3 to $4 trillion of capital over the next several years flowing into green energy investing, decarbonization, if you want the broader term. $3 to $4 trillion. That's private capital. It's not even the government money. But the government, because of the tax credits that we just looked at, are going to match a lot of it. New studies are showing that corporate investors, and it says investors, and that means the big guys, not the little guys, but your big investors, your corporations, industry, private equity, banking, they're all pouring a lot of money, just like Saudi Arabia and China, into clean energy. Clean energy investment is actually expanding its lead over fossil fuels. There's a couple of neat charts in here. actually the next one, that shows how fast clean energy is growing. Solar being the fastest grower. In the first half of this year, solar hit $239 billion just in the first half of the year. There's another $129 billion that will be invested in EVs this year, with about $37 billion in battery storage. The battery storage number will certainly increase over time as we get more and more solar built out. Wind is projected to flatten out by the end of the decade, but solar will continue to grow. Right now, about 80% of all new energy construction is alternative, and 2/3 of that is solar. So what's 2/3 of 80%? It's a little over half. So half of all new energy development is solar. That's going to come with batteries. So that's a pretty interesting market. We have a company that we're investing in because of the batteries, because they have an architecture that increases the safety of lithium batteries and increases the efficiency by about 30%. So solar is a pretty important theme. And one of the ETFs that we'll talk about is a solar ETF. Wind investment dropped recently and in fact is hitting a plateau for a couple of reasons. One, it's not nearly as efficient as solar, but two, it's pretty ugly. It kills birds. And birds eat mosquitoes, and we don't want the mosquitoes not to get eaten. So wind is running into roadblocks, both technologically and from NIMBY. So I don't think we're going to see a big uptick in wind. One of the problems is even with 80% of new energy development being alternative, that 20% is still fossil fuels. So in every time there's a headline that says, oh, India is going to use more coal for a while, the chest thumpers, yeah, man, fossil fuels forever, zuck yeah. It's just such a dumb thing to hear that I get tired of arguing against the imbeciles, the flunkies, the chest pounders, the foot stompers, keyboard warriors, because they're morons. And I'm harsh with some of these words because we're at a point where literally humanity is threatened. Our very existence is threatened. The idea that we can't go extinct is stupid. That it's making the richest people in the world go, oh, we better lead on this one, follow the money. And they're putting their capital into clean energy. Just this morning, major new plan to reduce methane, not just from the United States, but at COP28 as well. And this is important because even though methane is only 30% of the greenhouse gases, it's the most dangerous and it clears up after about a decade. So if we can cut methane to next to nothing, we can cut greenhouse gases 30% by the 2040s. It doesn't mean that climate change isn't already well on its way, but it means that maybe we can prevent ourselves from killing ourselves from being ideological morons. Even Exxon, the biggest fossil fuel polluter in the history of fossil fuel polluters, with a close runner-up in Chevron, is getting on board on this. And when we talk about things like biofuels, carbon capture, sustainable air fuel, these guys are in on it. Chevron's in on it. Occidental, Conoco. Why are they getting in on this? Well, the government realized in probably what was a goddammit moment that they had to get the big oil companies on board with preventing climate change from getting worse. Couldn't be a political battle anymore. So they gave in. Joe Biden gave in, said, look, guys, I'm going to give you a way between now and 2032 without destroying you, without not having the gas and oil we need between now and then. I'm going to help you help us in a, what was the movie? Show Me the Money. Jerry Maguire. Help me help you. And that's what Joe Biden did. He went to the oil companies and said, look, how do I get you on board here? And it came down to money. So the federal government, with the Inflation Reduction Act, incentivized biofuels in particular, but also carbon capture. The trick with carbon capture is not to continue burning the fossil fuels, but rather to do things like use agricultural and forest and other forms of waste to actually replace the fossil fuels. Again, this is why I'm in a metis. The carrot and the stick. The only way to have gotten Exxon and Chevron and Occidental and all these other companies on board quickly was a carrot. You could have beat them into submission, but with the court system the way it is, it would have taken an extra decade. Think about the urgency that the government sees and the scientists see in getting this accomplished quickly. Because you know that they have no problem beating Exxon and Chevron the same way they did the tobacco companies if they weren't scared as hell of what was coming with climate change. Solar is actually going to have more investment this year than oil. The problem is that, again, it's concentrated in a handful of countries. The Middle East number is going to probably double by next year. They're pouring a lot in, as exhibited by that Saudi Arabia headline that I showed you a little while ago. If you go to the IEA, just some amazing charts in this. Global clean energy investment versus fossil fuel investment. This is what's happened. Clean energy, fossil fuels. Clean energy, fossil fuels. So fossil fuel investment hasn't come down a lot yet. Clean energy investment is growing rapidly. This is COVID. Otherwise, it's been about the same, a little bit lower. Fuel supply investment. Upstream oil and gas staying about the same as we just looked at. Midstream oil and gas staying about the same. Coal has come down a lot. Low emission fuels haven't taken off yet. What do you think is going to happen over here with the Inflation Reduction Act? You already see it starting to move, right? Renewables for power, up, mainly solar. Fossil fuel investment for power production, falling, drifting down, but it'll fall off a cliff eventually. When we stop using natural gas to heat our homes, that'll be the big deal. We already know that induction ovens are coming. Grids and storage. I've talked to you about American Transmission Company before and the company that owns them. My favorite utility stock. Nuclear is just never going to take off. You can argue it until you're blue in the face. The reason it's not going to take off is that, yes, it's still dangerous. Not that it has a lot of meltdowns, but when they do, it's pretty bad. Fukushima. It's just never going to take off. Miss Wisconsin, who just became Miss USA or Miss America or something, is a nuclear engineer. She thinks we should have more nuclear energy. Well, the problem with that is where are you going to put it? Not near me. In fact, Wisconsin has closed all of our nuclear power plants. You know what's there now? Solar. And we have a coal plant that's shifting to natural gas and solar right near Milwaukee, owned by that utility that I want you to invest in. Electrification is coming and it's coming fast. Oil versus solar. 10 years ago, oil, solar. Now they're on par. Get the point? One of the things in the energy outlook the EIA puts out every spring shows kind of the general direction of things, and then they do a projection. And their projections use backwards looking data. They don't incorporate the growth curves very well. Never have. So they will underestimate future growth because it hasn't accelerated yet. They don't project out. It's just, hey, if the growth rate is this right now, then that's all we're going to say it's going to be in the future. But we know that the growth rates for renewables are accelerating. So when they show us this chart that by 2050, we're still going to have 10% in coal, I'm going to call bullshit on that. I'd say it's under 3%. Nuclear probably going to still be around 12. Natural gas, 34. This is the one that's going to fall off a cliff by 2050. Most new construction in America, starting soon, will not include natural gas. Already happening in a couple states. And it's going to be national at some point. That you just can't add to the natural gas grid. You can maintain what's out there, but you can't add to it. And that new homes have to mostly be electrified, not have natural gas running to them. It's going to happen. This is where the EIA is way off base. This number will be half or less. Not much else we can do in hydro. Wind is leveling off. Solar is the big upside. This will be around half. If China can do it, we can do it. We've talked about this before. It should be 80%. And that might take extra decades. This is going to be about half by the middle of the century. Hear me now, believe me later. Now, commodity traders are realizing that everything that I just told you is true, and they're making a fortune trading the commodities that have to do with a low carbon world. Follow the money. But in the last 6 months, really this year, clean energy ETFs and stocks have fallen off a cliff. It doesn't really put Biden's climate goals at risk. What puts all of our climate goals at risk is that we have imbeciles that might get into office that set back these plans by 4 or 6 or 8 years or 10 years. And then we might be ultra screwed. So investors have exited clean energy funds as the higher interest rates made those companies' growth and profits slow down. Oil price wants to use a super emotional word like devastating for U.S. clean energy stocks. And it has been a horrific collapse. But in the face of all these things that I've been showing you, if clean energy stocks have collapsed, does it seem like it might be a pretty good time to invest? But those companies aren't profitable. Well, that's bullshit. Those companies actually have had huge growing revenues. If you take a look at the top holdings in any ETF and go through their profitability, what you see is that they are either profitable or at the cusp of profitability. These aren't startups. A lot of these companies I was investing in 2012 and 13. Some of them a little earlier, but 2012 and 13 is, there was a spike and a crash back then. So a lot of these companies have just been moving with the development, with the adoption, waiting for the inflection points, waiting for the curve to bend up. What year did I say that would happen? Way back in 2020, I keep giving you the year, and I'm within a year on this. It's pretty clear at this point that in about 2026 and into 2027, the inflection point on adoption of all this technology is going to happen, from EVs to building your houses with solar and using induction ovens and heat pumps and all the other stuff. And then hydrogen will follow after that down the road for heavy transportation and energy storage. So if we know that the inflection point for adoption of clean energy is about 2026 because of what's getting built and where the capital is being deployed, should an investor start investing in those things in 2023 on what has essentially been a crash in those investments, in those stocks? If you're an investor and you can't put that together, don't manage your own money. Just hire me and go on vacation somewhere, travel and see the world. With all this money moving into clean energy, you must buy this crash. It might be your last opportunity to get in this cheap ahead of such a huge wave of capital that's coming. Now, monetary conditions can make it wavy for a while. So what? If you're a trader, you're not listening anyway because you're thinking in shorter time frames. If you're an investor, you need to think the way I just described. You need to be a little contrarian because that'll help you invest at the moments when nobody else is. And right now, Joe Retail, the money at the margin, and what do we know about prices? Prices move at the margin. Look that one up if it's not familiar to you. Prices move at the margin. I think Nagovitz just said that today. Big private equity investor, got big into Bitcoin a few years ago. Prices move at the margin. So you have all the big money pouring in right now. The little guys have been sellers and are adopting fake trader narratives to push those trades even further in their direction. There is significant investor exhaustion on the downside. There's just nobody left to short and no shares left to short. Failures to deliver are spiking. I will put that chart into an article. Naked shorting is under attack by the SEC and the courts. And Jerome Powell was, as I said he would be, a pretty nice guy yesterday. Now, he didn't hand anybody money, but he wasn't mean either. Monetary conditions are going to loosen up in 2024. That will be very, very good for clean energy stocks. NextEra, I just threw this headline up here so you understand. You're going to see more and more headlines like this. Clean energy companies beating profit estimates. I am pounding on the table here. And I don't want to do it because my dog will get mad. Just like I did for Bitcoin a year ago and continue to pound for Bitcoin, this is the moment that you need to dramatically increase your clean energy investments. You need to hear me now, even if you can't believe me now. I've been mean in the words that I've used because I want to shock you into action if you're not already on board. I want you to look up things like what I just showed you. It is easy to find 100 headlines that show over and over again that the vast majority of new energy investing is clean energy investing. Now the oil companies are on board because we gave them a tax incentive to do it. It's why Berkshire Hathaway is gobbling up as much Occidental petroleum as possible. Occidental is the leading carbon company in the country, followed by Chevron, which had been another Berkshire holding, but Why do they need Chevron when they have Occidental? So Berkshire basically sold its stake in Chevron in the last quarter to buy more Occidental, which is the stock that I keep telling you to buy anytime it's around 60 for your fossil fuel side of your portfolio. Occidental is going to be into a lot of the clean energy investments that are coming as they do what basically Saudi Arabia is doing. They're going to take their oil and gas profits and pump it into carbon capture, biofuels, and hydrogen. New Fortress Energy, another one that we've been in that's recently gone on a big rally. They have that very unique liquefied natural gas collection process that they can do at sea. They don't have to build a plant, they can do it at sea. And they're gearing up for hydrogen with the utilities that they're buying, mainly in the Caribbean, but also Mexico. They're getting into Mexico. They have some things in the Gulf Coast, North Sea, Middle East. Capital knows no bounds. All right, so we're going to talk to Shooter in just a minute and do the major markets report, where we will do our 6 big major markets, which are the dollar, treasuries, S&P 500, QQQ, small caps, and Bitcoin. And then the sector that we're going to cover this weekend is clean energy. You should be investing heavily in clean energy over the next several weeks and months. This is not something you should be doing over the next year. It's something you should be doing quickly. The prices show it. I will just show you one clean energy ETF. Heck, let's show you more than that. Do a 5-year chart. Let's add a few others. PBW, ICLN, TAN. That's a pretty big correction, huh? If we move this from the peak down between 30 and 70%, really down to the prices of 2020. These are all buys. So the article that I'm putting out will describe how to do this. The Shooter and I will talk about it in a minute on the major markets report.